Okay, we have a good number of people registered for today, and we have a decent proportion already logged in. So I'm conscious that it's only a 45-minute session today, so I don't want to delay too long from starting. So we'll let people join as they can. Um, Most of you will know my name is Sandy O'Leary. I'm head of the Risk Advisory Service at CalcuRisk. And today we'll also be joined by Jerry Joyce, who's our co-founder of CalcuRisk and also our Chief Technical Officer, who has been heavily involved in the DORA side of things for the last long time, probably. He thinks at least, in the last 2 years, within the run up to it and the last two reporting cycles. So I guess the main driver behind today's session really is that DORA is already here for some sectors and it's on its way for sectors such as the credit unions. And, we know we're very familiar with the fact that Irish credit unions have already done a lot of the heavy lifting as regards, elements of what will be in DORA. And the IT Thematic Review, for example, has given credit unions the foundation for compliance, with just some, like everything else with these types of transitions into new legislation, regulation, and guidance. It's about the detail when it comes down to it. And in this particular session today, we're going to provide some insights from working with firms outside of the credit union space. As I said, Jerry's been working for the last two annual cycles on the DORA compliance elements. And I suppose what we're trying to also meet for you or help you to meet is this new pillar of DORA, which is about information and intelligence sharing. I suppose the good thing when it comes to a company like CalcuRisk, as you're no doubt aware, CalcuRisk has been working with credit unions in Ireland for 20 years now, but the company also works with a lot of clients in the public sector, other not-for-profits, and in the context of today's session in particular, they work with a lot of other financial services sector firms, and many of them have already fallen within the scope of DORA and have already been through the first two reporting cycles at this stage. So I'm sure you'll agree that it's a pleasant change for credit unions to be able to learn from the experience of other sectors rather than being at the coalface of implementing credit union specific legislation, regulation, and guidance, of which there has been quite a lot in recent years. So as I said, the intention today is to try and provide some reassurance, firstly, as well as around the work that's already been done by credit unions, but also maybe some insights into areas to concentrate on and pitfalls, hopefully, to avoid. I suppose the one thing we feel is really good is that it's always better to learn from rather than, I suppose, learning from our own mistakes. The one thing better than that is learning from the mistakes of others. And that is, again, one of the things that the DORA is trying to encourage amongst firms to learn and to absorb and not have to duplicate the mistakes that others have made. So today we're going to have a look at the work the credit unions have already done. We're going to have a look at the merits of the gap analysis. We'll look at some key topics around incident management and then third-party oversight and the register of information submission. And at the end, we'll leave plenty of time for questions. And if for any reason we don't get be able to address all of your questions, I'd be happy to follow through afterwards. I'm going to cover the first three topics myself, and then Jerry will cover the third-party oversight and submission of the register of information. And as I say, we'll have plenty of time for questions at the end. So in terms of the process of evolution, I suppose, the view is that DORA is the next step on a journey that you've been on for quite some time. If you think back to the pre-2012 days, and I was around then, believe it or not, in credit unions, and a lot of the smaller and even the medium-sized credit unions at that point mainly just offered savings and loans products. They were available only during business hours. So credit unions generally, to the degree that they gave it a lot of attention anyway, really only focused on, I suppose, disaster recovery in extreme circumstances. Even at that time, I think the membership would have been happy enough to deal with a closure of a couple of days if they had to, in the event of a disruptive incident. They would have understood, they would have been accommodating. I think what has happened is that the evolving complexity of the credit union product and the service offerings and the dependence on technology, basically, it wasn't really a surprise that the Credit Union Cooperation with Overseas Regulators Act started to move that needle then from disaster recovery into the concept of business continuity. And that act in particular required certain specific policies around information systems, management information policies, and a business continuity plan. And that was the first time it became a requirement. And then moving on from that point, with the ever-increasing reliance, as we know, on IT and the acceleration of cybersecurity threats that are still accelerating, unfortunately, Central Bank published their cross-industry guidance on IT and cybersecurity risks in 2016, and that was then followed by the GDPR in 2018. This addressed, obviously, data protection in all its forms, but included the digital forms. So operational disruptions then that were linked directly to third and fourth party service providers started to arise and caught the attention, shall we say, of regulators. So they started to delve a bit deeper into those sort of arrangements in financial services firms. And the central bank published guidance on that particular area then in 2021 on outsourcing, setting the expectations for firms. We then had significant and high-profile operational disruptions across multiple different sectors, including finance, health, and so on. And combining that then with the success of the credit union sector in broadening their own product and service offerings, including becoming a 24/7 business, which wouldn't have been the case in the earlier days, the focus then again turned towards operational resilience, having moved on, if you like, from disaster recovery through business continuity and then into operational resilience to ensure the credit unions start to develop that capability to work through disruption rather than just dealing with events and everything stops until you correct the problems. The central bank's IT thematic review, I suppose at that point, focusing on operational resilience, did start to focus again on the next step in this evolutionary process. And DORA is the next logical place to go. Even if you're not required to comply with DORA, whatever sector you might operate in or in time, as in that it's going to be 2028 when credit unions come under the requirement to comply with DORA, it is everything that it suggests is good for businesses to be doing. And it aims to reduce the risk for consumers of financial services by enhancing how those organizations mitigate, document, and react to potential threats and vulnerabilities in the digital environment. So why would that not be a good thing to do? The good news is credit unions, as you know, are not starting from scratch based on everything that we've just spoken about. It is part of that ongoing journey that everyone's on. And we can learn from the good and bad experiences of other sectors, which is the point of today's session. If you like, the cross-industry guidance that was published in 2025 has already kickstarted the credit union sector's progress towards achieving compliance with DORA. So I suppose the big question is, and one of the things we wanted to look at today is, where does one start and the other end? So if you think about the IT thematic review and DORA, the IT thematic review was divided up into the sections on IT security and cyber risk management, IT continuity management, IT governance and IT risk management, and IT outsourcing. DORA has similar, the two do not map directly onto each other, but there are obvious overlaps. So what I tried to do is just align the headings within DORA to the IT thematic review that they broadly correspond to. And you'll see there's an additional one at the bottom. I suppose the question is, how much of DORA does the IT thematic, or how far towards DORA does it get you? And at a recent conference, a speaker on this topic, after a lot of pressing, I noticed, guesstimated that the IT thematic review would take a credit union to about just under 50% of the way to DORA. I think he may have said around 47%. So the key point is not to underestimate how much additional work there might be to get you past the thematic review stage and compliant with DORA. I suppose it's also interesting to note that the move from the IT thematic review into DORA is making the C in ICT a bit more explicit. The communications element is obviously in the thematic review as well, but DORA makes it way more front and center. And we're all well aware, for example, of how critical the internet is these days. I was helping a credit union with a business continuity plan review recently, and one of the things I noticed in it was, that some of the backup arrangements to put the document was that they would be, simpler now that it's cloud-based. But what if the internet's not available? We are so dependent on it now. It is, in some ways, it mitigates certain risks, but in other ways, that communications bit is even more critical than it ever has been. Today's session is an example of this last item here on the right on that table of the information and intelligence sharing piece that's been introduced by DORA. And having been through DORA, the implementation cycle with all the financial services firms, Jerry and Tekla back in the office are a mine of information on how to get through it in one piece with as little pain as possible. So that's hopefully what we're going to cover through today's session. So the gap analysis, I think that's the bit that everybody should be doing, and why would you want to be doing it now is the big question. And I would say the key thing to try and address as early as possible is to try and figure out how much of DORA is being addressed by the thematic review, and then identify which areas need enhancement and which areas are additional. So where are you going to have to consider, for example, what sort of additional resource that you're going to need? It's one of these, I suppose, key areas that, again, as I say, going back to the earlier slide, which showed the evolution of the process, this type of work is not a one and done. There's going to be a burden to comply with this on an ongoing basis. And it's not a case of temporarily, allocating a certain amount of resource and hoping that'll get you over the line. There will need to be additional resourcing for ongoing management of those ICT risks. And that includes preparing for the thematic review audits, because some will take place before the thematic review, I suppose, gets to work in terms of the tasks. There will be audits towards the end, and then there may need to be additional audits if there are findings from those interim ones. There'll need to be resource around completing the tasks to address the thematic review findings. There will be post-thematic review work to be done to maintain those standards, because it's not about achieving a point and thinking we're done. It's about keeping it up after that. You'll also then be allocating resource through that DORA transition period until it becomes mandatory for credit unions. And then there will be the post-DORA work. So it's not going away. There is a lot of resourcing required throughout and to maintain and develop it and keep it going. And the third part is that the third reason why I think you should do your gap analysis now is to implement an ICT risk management framework that can address both the thematic review and grow to incorporate the DORA requirements. And ideally, to try to avoid duplication of effort as much as possible. It would be very frustrating and annoying to put a lot of time and effort into getting your framework right for the IT thematic review, and then to find that you have to kind of revisit areas and change, which would have been better aligned if you could have aligned it better from the get-go. So as I said, really, if you haven't already done so, I would definitely recommend completing your DORA gap analysis now, as you can see then exactly what point you're at and what point you need to be working towards. You'll be able to see the timeline that you have to achieve it. And if there are efficiencies that you can make along the way, then it makes sense to try and do that. And there could be additional information. For example, if you're engaging with your third parties, that there's a certain amount of information you need for the thematic review, and it might be sensible to go and get the additional information that you'll require for DORA at the same time, and it saves you going back and forth. And I suppose, it really is worth noting that all of this effort is intended to assist credit unions to deliver positive outcomes for members. And that's what credit unions, as we know, are all about. And that really does align with the Consumer Protection Code as well. So some credit unions acting as retail intermediaries already come under the the Consumer Protection Code, but the rest will likely come into scope following the completion of the consultation period and then the transition period, which is yet to be announced. So this operational resilience journey will also form some of the body of evidence in this area, and a key element of demonstrating proactive risk management in all three areas is through incident management. And that's what we're going to have a look at next. So when it comes to incident management, I've assisted Jerry on a number of scenario testing exercises over the last while with companies in other industries. And there's some key areas which arise time after time, irrespective of the sector. And it is important to have, an idea of what those might be. And hopefully these will help you guys. Firstly, when it comes to the framework documentation, we all know you have to have a comprehensive suite of policies, and I'm very familiar with how many policies exist in the credit union sector. In this particular area, it's things like your information security policy, the change management policies, if you have a bring your own device policy, records management, outsourcing, they all come in, are critical in this context. You also have to have your incident specific plans. So whether you're talking about your business continuity plans, disaster recovery, data breach response, cybersecurity breach response, pandemic response, all of these good things, and succession plans also in terms of this context. You need to have your incident specific procedures. So whether you're talking about data breach, cybersecurity, health and safety, complaint handling, all of those good things. And all of them need to be maintained up to date and accessible out of hours and off network. You also need for the people to be familiar with what they have to do. So are all incident management activities adequately resourced, even in stress scenarios? Does everyone understand their own role during an incident? Has there been adequate training provided? And will there be ongoing monitoring and support? Who's going to do that? When it comes to reporting, you really need there to be clear and comprehensive reporting guidelines. What, when, how, who, and that involves all stakeholders. It's really important to keep that in mind. And the content will vary depending on the stakeholders. So it's about preparing for it and being clear. You also then have communications channels. I think a lot of businesses assume that the default channel will be available in a stressed situation, but that's not always the case. It depends on the type of incident that you're dealing with. If it's, if you can still maintain your premises, then you might just have meetings. Other times it might be on the phone. Certain mobile networks might go down depending on the incident. So do you have landlines available? Are you using WhatsApp? Do you have a dedicated emergency only chat, for example? Are you using email? So again, having thought about those, see how some will work in some scenarios and not in others. Consider your emergency call tree. This is one of the things we find all the time. There's either not been maintained or you haven't set one up. Try and make sure that there is one in place, that it is designated for emergency use only, because you don't want it being just used for unnecessary communications. You want it to be maintained up to date with new staff and and leavers and changes of phone numbers. You need clear guidance for everyone on how to respond to messages that might appear on this particular channel, to make sure that they're not cluttering up the messaging when you're in an already stressed situation. Ideally, it'd be good to have some draft messaging in place and alternates ready to go for different incidents types. You won't have the entire text definitively in advance, but you might have at least a strong place to start. When it comes to assurance, then, there's, obviously when we're talking about operation resilience and disaster recovery and all these good things, we'll have backups. But the question is, have you tested them? Have you done a test restore? Have you confirmed that you will be able to restore them? Have you got clear process mapping so everybody knows how all of the various systems interact with each other? And have you actually completed your scenario testing? Ideally, if there are third parties involved in a particular scenario, then they should be involved in the testing. As we all know, scenario testing should include severe but plausible scenarios, because there's no point in testing something that you're going to be good at. It's about trying to find your weaknesses. And you want to try them in all sorts of different scenarios, whether it's cyber breach, might be human error, it could be a weather event. It is really good to work through those scenario exercises, because that's where we have found a lot of these points that I've mentioned in the last two slides. So please do remember to try and challenge yourselves. It's not about looking good, it's about seeing where you can make improvements. So I'm going to hand over to Jerry now, and he'll take you through the next few topics.
Thank you, Sandy. A lot of food for thought there. And before people ask, yes, we will be providing a copy of the slides because there is a lot of information. But what we've tried to do is assemble it, not to tell you what's in DORA, because you can read that, but to tell you the sort of things that we have learned over the last 2 years. Now, if I can take control, I should be able to onto my next slide. Now, I'm not going to go through the Act. Don't worry. I'm not going to deep dive into the DORA Act, but when it comes to third-party oversight, there are 8 acts within the DORA that you should read. Nothing surprising in there. They'll tell you the sort of things that are expected, like policies and arrangements and assigning responsibilities, just all good kind of governance stuff. I just put it up here as an intro to what I'm coming to. So that came out first, the Act, and saying this is what they expect. And then the RTS, the Regulatory Technical Standard, is more detailed on how they expect you to do it. A bit more of the what, but a lot of the how this should be done. Now, as Sandy said, you're doing a lot of this already, but what I will talk about maybe to this slide is not the individual acts here 1 to 10, but the things where you're likely to have gaps. And if I start at 10 and exit, how many of you actually have an exit plan? I mean, if Progress or Wellington were to decide to get out of the business, I mean, it mightn't be you who wants to exit. It might be that they decide to exit. What is your plan? And the time to start thinking about it is on a fine sunny day like today, when you're not stressed. Think what would happen. I think the other thing where you will find gaps is on contractual arrangements. Hold on. I think we've advanced on a bit too soon here. Just go back. If I can. Okay, I'll stay on lessons from the trenches then. But what I was going to say there is that when you go through the RTS, the Regulatory Technical Standards, what you probably find is your contracts where you have them are missing some important clauses. Now, what we've seen ourselves in the last 2 years is some of our customers in the financial services sector have sent us addendums to the contracts to add in things on AI and on GDPR. Now, we would have said GDPR was in our original contract, but larger organizations sometimes just want to get every third party to sign this addendum. Didn't have any problem with any of those. So this is really the nub of what I wanted to speak about today, and I have one slide here and 2 more on the Register of Information, what I call the lessons from the trenches. The things we have seen in the last 2, as Sandy said, reporting cycles in particular, when it's particularly stressful coming up to that deadline of reporting. But some of the early lessons, your outsourcing policy, if you wrote that 5 years ago, it's probably in need of a serious update, because there are things that are expected from DORA that should be in there. I'll just pick out 2 that I remember. I mean, what will you outsource and what will you not outsource? Have you considered what is available for outsourcing and what do you keep in-house and keep the skills? And then the process for outsourcing, how will you select those people you're going to outsource to, and who will be responsible? I think particularly the responsibilities, having somebody who's going to do that oversight bit. Early on, and this was well over 2 years ago, we realized that from early customers, when they started putting information that they had into Calculus on the third parties in particular. One of them said to me after 2 weeks, well, he said, that's been worth it already. He said, because now I know how much information I'm missing. And this was a key thing in DORA. And go back to 2024 when DORA, the regulator, did a dry run. 86% of the errors, and they had thousands of errors from, I think, about 2,000 submissions, that 24,000 errors, and 86% of the errors were missing information, right? So the sooner you start, the sooner you start to identify the missing information. And what do I mean by missing information? You'll see, I mean, do you even have contracts? And if you have a contract, do you have a contract reference number? Now, a lot of our clients just started putting in sequential numbers, our REF 123. But you will need a reference number for all the arrangements. Do you have start dates? Do you have end dates? Do you have, a clear description of what services are to be provided and who's responsible? Your position on fourth parties. So I think the contracts, certainly when you start gathering the information, you probably see where you have gaps maybe in stuff that wasn't in them. Now, they will ask for start date, end date, and renewal date. And from what I've seen, many people don't have an end date as such in a contract. And so somewhere in the finer detail, it'll say, if there's no end date, put in 9999 1231. And yes, you will learn quickly that all dates in the reports are in year, month, day. But if you're a customer of ours, we look after that for you. I think a lot of customers are using the renewal process. If you have an annual renewal of the contract, it might be an automatic renewal, and check if you want to change the contract, maybe there's a 90 days notice to say we need to update the contract, but use that renewal cycle certainly to bring it up to date, I would say. Yeah, I've mentioned what customers have done with us. They've added addendums. Sometimes it's easier to add an addendum rather than modifying the original contract. A key question, and you need to find this out because you will be asked and you will need to know. And if you're serious about information security, you will know everywhere that your information is stored because you are always responsible. Now, in DORA, they only want to know the country in which it's stored. They don't need to know that it's in the Microsoft data center in Dublin. Ireland will do, but know where the data is stored. And if you're outsourcing to third parties, very often that is with data processing involved. You need to know if the third parties are involving fourth parties or subcontractors. And certainly the last RTS that was published in July of last year says to me that the supply chain is coming under greater scrutiny in DORA, that probably this year they're only looking at third and fourth parties, but it wouldn't surprise me if in another 2 years they're looking at fifth parties and even sixth parties. So get used to it. Go back up to the policy and say, what does your policy say about fourth parties and your third party? I think at a minimum, they should be telling you who the fourth parties are. I don't think you can realistically have a veto. I don't think maybe if you're a very, very large organization, you can veto things like that, but certainly you need to know. The focus in DORA is on ICT and it's, the digital side. And you need to have a methodology for determining which ICT services support critical functions. And to do that, you need to, first of all, determine what is a critical or important function. And by function, we call it a business service. How do you determine which of those are critical or important? It might be down to 3 simple questions. Now, I know Sandy has written about this as well, but I would say, if you lose a service, if it's interrupted for 1 or 2 days, let's say significant time, does that impact a lot of your customers? When I say a lot, a significant amount, you set the number. If I said 70%, you might say, well, that's critical. You might say it's critical if it's 50%. Would the regulators, ears prick up if you had a disruption to that service? There's probably a few questions you can write, and if the answer to any one of them is a yes, you'd say it's critical. So it might be obvious, but you need to write it down because you need to show the regulator you've thought about it, and this is how you determine what's critical. Now you know what's critical. Now you look at, well, who's supporting it and who are we dependent upon to be able to deliver the service. Yeah, it's straightforward, but you need to do the thinking and you need to identify all those third parties, and you'll be surprised how many you do involve. The LEIs, legal entity identifiers, were thorn in the side of a lot of our customers because their third parties didn't have one. We got one. We bought one, paid €64 and got one for 3 years. It's easy enough to do, got it within 24 hours. It was just easier to be able to say, yes, here's our LEI. Yes, we do have a CRN, but LEI is what the regulator wants. Now, they've relented in some cases where the third party is an American and they're not in Europe and they don't know LEI and they're not going to get one. So they've accepted reluctantly CRNs, but if you get the LEIs, you can check on the GLEIF kind of an online database that it is correct as well. And I mentioned already the exit arrangement. You have to think about exit at some stage, and maybe better still, have some reference to it in the contract. You need assurance that if you exit a contract, you will get all your data back within a reasonable time frame. That the company will do their best to make that exit possible. So I'm not going to advise on legal clauses, but you need to certainly think about it, and I would say certainly contractually have support in there. Okay. I do have control. So that's, if you like, the third party and third party contracts. Certainly the biggest thing in DORA in the last 2 years has been the Register of Information, which is one of the details in the third party oversight, but it has been a big detail because this is the graphic from the regulator, and it's actually 15 tabs if you were to look at this in Excel, pieces of information, and it's dicing and slicing the information on third parties in 15 different ways. Now, the good news for you is that if you're a single entity, you're just one credit union, you don't have branches in the sense of legal entities. You've just one, you don't have a parent, you are the ultimate parent. It simplifies things somewhat. Now, when I say simplify, I'm talking about 10, 15%, not 50. So a number of these 15 will drop away. There'll be one record in it or no records. So let's say you're down to 10 in this case. Let's have a closer look. This is a bit more readable. These are the 15 files. Ultimately, when you submit them, they're CSV files. But when you're working with them, we help you by producing an Excel with 15 tabs so you can actually see it. I'll show you an example of that in a moment. The best way I can explain this on the templates is maybe with a graphic. And this is a graphic I use for how we store the information, because what's not obvious from my previous graphic is it's a relational database. So there are links between the functions you offer and the third parties who support it. And you might have 3 third parties supporting a particular service you provide. Then in my graphic here, from the business service to third party, there'll be 3 links. A business service you provide might have multiple activities associated with it. Some of them are licensed, some not licensed. So again, that's a one-to-many relationship. The third parties may have fourth parties, could have more than one fourth party. So you put in all the information, I think, into a system, and then you create the links. The report you have to produce shows different views of that data. And a lot of the failures that we've seen, and more last year than this year, reporting cycle, was what they call referential integrity. You've referred to somebody in this particular file, but they're not in the other one. And that's if you're trying to create those 15 files individually, I can only imagine it's a nightmare. But if you create it in a relational database, the links are there, and you get the system to push out the report. One thing that will make it easier for you as well is the entities one here. In larger financial services, they might have multiple entities who are benefiting, as they say, from the third-party service. In your case, I would imagine it's generally one. So it does simplify it, but you still have to gather quite a lot of information. So let me show you now, and I've just 2 more slides, the lessons from the trenches there. If you receive X services from a third party, then you will have X records, and that one for each service. It's not so much a third-party record as it's the service. And every contract for service needs a reference number. Now, you could have an overarching contract for 3 services, so you'll have 3 records there, but you might have 1 number. But you'll need a contract reference number. If you have a legal department or somebody, they might already have put a number on it. Um, you'll need to know about the fourth parties, and you'll need a reference number for them as well. It can't be the same as the third party one unless it's you describe it as a subsequent contract. But generally, it has to be a different number. Who signed the contract? I mean, it seems like an obvious thing, but you need the LEI, whoever ever signed it. You're probably signing your own contracts, so it'll be an easy enough one to fill out, but you'd be surprised how many fell over that. Um, I mentioned the LEIs just to ask the third parties, and I think a lot of them now will have the LEIs because they've probably been through this already. Big one that caught people is the ultimate parent. There's in a record you have to put down one of your suppliers is AWS, and it's AWS EMEA, Europe, Middle East, Africa. That's the AWS in Ireland. But then you have to put somewhere in that their parent, their ultimate parent, is AWS Amazon Inc. And what is not obvious is, but then you have to put in a record for Amazon Inc. and you put the LEI in two places because they're their own ultimate parent. Things like that. So if you put in an LEI somewhere, you have to put in a record to give a little bit of extra detail. You don't have to be getting a service from Amazon Inc., but you actually have to have a record in there in the report. You'll be getting a copy of this. So these are the things that have come up. The global headquarters, you would think it would be the parent's headquarters. No, it's actually the headquarters of the third party you signed a contract with. Date formats I mentioned. Things like trailing space is really annoying. If you write something as a description of a service, don't have a space at the end of it. Yeah, we accept it, of course, but the European Banking Authority's database, big database, will reject it. Very, very pernickety. And if you have activities that are not licensed and you need to put in something, this came out a year ago. People said, "What do we do?" We don't have a code because the reports are all in codes. There wasn't a code for supporting function. The regulator added it. My last slide, really. Some additional lessons. There's a convention. The report will have a particular name. You'll know your C number, and it'll be a zip file. You create a zip file, and I'll show you the structure of it. Is the zip file is a folder with two subfolders, and those subfolders have about 20 files in them. This was a bit of a pain to assemble last year for customers, even though we created all the files. We created a macro for people to create CSV files, and they had to be in UTF format. The good news is, if you're using Calculus, it's one button now. But what wasn't obvious was that things were case sensitive. So if it says, B, lowercase b underscore 203, it has to be that exactly, not a capital B. But later in another file that references these, surprise, surprise, it has to be a capital B. And that caught a lot of people. They were putting them either both lowercase or both uppercase, and there was just no consistency. But these are the things people found out. And when you do create your CSV file, don't open it with Excel. Technically, it's possible, but if you open a CSV file in Excel, it changes the format. So you have to open it in Notepad. And if you haven't got it, get Notepad++. It's the best. Again, that's something a lot of people fell into. They were opening them in Excel and think they're saving them as a CSV, and they were being rejected, and they didn't know why they were being rejected, but it's because Excel had put in additional, I would say, characters into that file. It wasn't a clean file. I mentioned the missing information in the dry run. The 86% was missing information. Case sensitivity, in some places it has to be capitals. A filing indicator is always true. This is a file that says we're submitting these 15 CSV files. And even if 3 of the CSV files are blank, just have the header row, you still have to say true. Now, apparently in Cyprus this year, we had one customer and they had to say false if the associated file, which was attached, if it had nothing in it. But CBI wanted everything saying true, things like that. And there's another one, if you have 3 services from a company, and in 5, they don't want 3 rows, they want 1 row with the value summed up in the row. And the last one is one of the files is the definition, your definitions of, low, medium, high, severe, all the different drop downs, and they want it in one row. Later, that'll become obvious when you start doing it. I'm going to show you one one last slide. This is, I suppose, blatant maybe promotion from us, but the top half is what we call a text report. And it's the report, but what I call human readable, of, I think it was, I'm looking, I think it was 0502, one of the 15 files. And we highlight in, as you see, that kind of a brown color and the word missing, where you're missing information, because the bottom file is the one you submit to the regulator. It's not as obvious that things are missing. Yeah, I can see there are blanks, but it's not even readable, because if you're missing stuff, you can't, well, you can in the bottom, you can see the name of the third party, but some of the 15 files, you only have the contract reference number as a reference point. So yeah, it's a bit scary first, but the good news is that a lot of companies now have been through this cycle, and this year was different. This year was easier for most people. There was more error checking, and there was more feedback on errors. Like I said, the trailing spaces, didn't see that last year, but I think it gets easier as the years go by. Now, myself and Sandy have put in a couple of links in here. You'll get this file of where you can get further information. There is lots of information between CBI and the EBA. And I'm sorry, I've gone over time, haven't I? But we still have some time for questions. Sandy, I realize that I was running out of time too late.
No worries. You're all good. Sorry, I accidentally moved you forward when I tried to unmute myself and put my video back on. The joys of sharing.
So, if you have questions, if you put them into Q&A, okay, I'll have a quick look. We have a few minutes. I'm conscious as well that although most of you are actually in the Republic of Ireland, we do have some from outside. I'm conscious that in parallel to this, there's a webinar going on in the UK, which is interesting, that they're introducing what they call material third parties and enhanced incident reporting. And it's very much like the incident reporting and third party oversight in DORA. It's the UK version of it. And they've got a webinar on today. In some respects, theirs is simpler, but there's some piece of information that they're looking for that others aren't. Do we have a question, do we? From Sarah, when will credit unions have to commence reporting the register of information to CBI? I think I can answer that, and I think it's March of 2028. Sandy, am I right?
Yeah, it's effective. Yeah, from the I think it's January 2028, and then yeah, the reporting thereafter.
The reporting in February or in March
Mm.
2028 will be for the 31st of December. So you
Yeah.
got kind of 3 months to assemble the stuff, and the portal generally will open in March, and you can submit your report in March. Sorry, that was anonymous. This one is Sarah. That was great. Thanks. I've been using CRO numbers as identifiers. Should I replace those with LEIs? I would say yes, if you can. As you get them, ask your third parties if they have an LEI. The documentation says it has to be LEI or EUID, but we do know that in the end that they relented and took in CRN, accepted CRN, but do ask your third parties for LEI. The next one is for you, Sandy. I think you talk about extra resources for managing this on an ongoing basis. Do you see this extra resource being compliance risk or IT?
Unfortunately, I would say probably all of the above, in the sense that there are activities for any and all of that going on. I think the biggest one that will probably challenge is the IT side of it. In that, I guess, like a lot of projects, you kind of assume if we can get a third party outsourced service provider to get us over the project, there's a perception that that would be enough. But I think and you can chime in here, Jerry, if you think so. I think there's going to be an ongoing technical requirement that is going to be able to maintain, I suppose, compliance with the requirements and the expectations. I think it's going to be a combination of all three: compliance, risk, and IT.
I agree. I mean, it's not a full-time person, IT person that it's going to require,
No,
but you're going to require
no, no.
the skills of an IT person who can, and maybe I glossed over it, but there's a part in there on due diligence on the third party. And we often think of due diligence as just initially before you sign up a contract. We certainly get a lot of that, but it's a smaller percentage of our customers who actually do the ongoing due diligence and ask us questions every year. And I think that is the expectation that if we take the technical bit, that there is um, a revisiting of those technical questions on in terms of how well or what security measures the third party has in place. If you take what was acceptable 10 years ago and what's acceptable now, there's been quite a shift, in terms of
Mhm.
your technical um, defenses. So yeah, I think there will be some technical due diligence required on an ongoing basis.
And I think, as we've said earlier, even if it weren't to be a legal requirement, everything that's
Yeah,
in DORA is good thing to be doing. And, your own, particularly with credit unions, it tends to be outsourced in terms of your infrastructure service providers. Like they will be needing to help you and support you. So basically what I'm saying is it's kind of, yes, there'll be a lot of maybe data gathering and resourcing and a little bit of, additional work in the prep for DORA, but not to underestimate the fact that those requirements are going to be, especially in the reporting side, our annual requirements. So everything has to be maintained and still be working towards achieving your digital operational resilience, which is what the aim is ultimately.
yeah. And I think, and I'll say it again, I think um, the supply chain is going to come under greater scrutiny. And
Mhm.
if you're talking about extra resources, depending on the size of the credit union, I can imagine that there might be a role, and it might be an individual, or it might be part of the role, but like third party oversight. Um, it's hard to see. I think you'd agree, Sandy. Hard to see it all in one person to have that risk
Yeah,
compliance and IT skills, but there might be one person who has the responsibility of pulling that together. If you know what I mean,
yeah,
some senior person who might draw on three different resources, but to make sure it gets done.
yeah.
Um, yeah,
And again, credit unions are doing large elements of this already, in the, under various other expectations, whether it's outsourcing guidance and so on. They will be doing a lot of this work through the performance review process. You would have had your third party risk register in place. All of those are still, being worked on as we speak. So it's really just
yeah,
about making sure that, as you say, if the expectations go a little bit further and there's enhancements to it over time, that somebody's on top of it on a continuous basis. Um, but yeah, it's not going to be possible, I don't
yeah,
think, for to be down to one person. It will be again a collation of activities across the credit union.
yeah.
Mhm.
Okay. No more questions have come in the last few minutes. So, but you have Sandy and my email address.
Yep.
We're always open to receiving emails with
Hmm.
queries as well. We get interesting questions from customers. It's Sandy's
Hmm.
daily job in risk advisory. Um,
Yeah.
but yeah, do keep an eye out. There will be obviously over the next 18 months, 2 years, there will be other events in DORA, and we'll keep you informed. But I think when I see the difference this year from last year in that reporting cycle and how much more relaxed people were, it went a lot better. Interesting that this year the regulators seem to find a lot more very granular, very detailed errors that they didn't mention last year. I think the regulator, both CBI and the European Banking Authority, I think they've upped their game as well. I think their systems are better, their reporting
Mm.
is better, the error messages are better. They're at least now understandable by humans. So you're going to benefit from that. You're going to benefit from cleaner, smoother systems, I think. Yeah. But don't wait to start. As Sandy said,
Exactly.
start now. It's good for you
Yeah.
anyway and good for your members.
Yeah.
Sandy.
Cool. No, absolutely. Agree with everything Jerry just said. So please do reach out if there's anything we can help with, or if there's anything you would like clarified after today's session. Thanks everyone for
Okay,
joining us.
thank you.